I've had some interesting experiences myself in the last little run. We actually attempted to purchase a uniblock. We were looking at it and working with yourself, Goose, on that to see if it was possible. And I was just mind blown, absolutely mind blown in the change of environment, particularly access to finance and at what rates. It really, really just set me on a different path of going, well, things have changed on that landscape, particularly for me and my circumstances. I then had a conversation with you and you said this is actually fairly common with what you're seeing with other people as well. In the idea that that is happening and market conditions have changed to a degree with what you're talking about here, how are you looking at adapting? You've hinted on diversifications and other things. How does one adapt to this environment so they don't end up in that position of, well, couldn't do anything in 2023 or potentially sat to the sidelines because they just weren't aware?
Yeah, well, I think it really comes down to mindset, right? Because fundamentally, there's only ever three constraints in building a property portfolio, right? There's the constraints of access to capital, access to cash flow, or access to borrowing capacity. They're the three constraints. And so if you apply the theory of constraints to your portfolio to identify what element of those three things is missing that is stopping you from progressing your portfolio, you can then identify what type of asset may need to be acquired in order to, or let go, sold, in order to unblock the constraint that you've got in your portfolio. Because the 99% of property investors never achieve the goal that they want. 99% never achieve the financial freedom that they're after. It's crazy, right? 70, 90% never get past two properties, but only 1% actually ever get to, the degree of, financial affluence and freedom they expect from their property portfolio. And the reason for that is because they get stuck. And so, breaking that down, if you can avoid getting stuck, if you can continue to grow your property portfolio, you'll achieve your goals. It's that simple. Just don't get stuck. So then applying the theory of constraints, you can then identify what do you need more of and what do you need less of. So then this allows you to approach your portfolio composition in a different way. And so rather than saying, should I buy a property in 2023, it's a question of saying, how could I buy a property in 2023? Or if I were to buy a property in 2023, what characteristics would it need to have in order to make sure that I didn't create a bottleneck in my portfolio that would prevent me from moving forward or could cause, a second order consequence that I don't like? And this is the biggest issue that I see with property investors is they don't think through what the second order consequences are. They go, I'll buy a house and see what happens. And then when they see what happens, it's like, roadblock. And it's like, well, you shouldn't have bought that house. And if you just spent some time to think about what happens immediately after you settle on that property, what does that mean? And they literally just build constraints into their own portfolio, and then they've got to try and untangle that mess. So a little bit of process design helps.
I reckon there has to be a fourth layer to that though, like whether it's sentiment, confidence, or something like that. So one of the things that for me, second half of 2022, I was looking to essentially rebuild my confidence, going, wait, how do I play this now? Personally, I go, well, interest rates are a bit higher. Personally, I'm like, well, maybe the opportunity is slightly different. And so I had to go and act. My theory of constraints, my very first constraint was myself, and actually going, well, everything's saying that the doom and gloom is there. Don't buy anything. Like property price is going to tank. Like everything. Even my dad's saying it, and I'm like, oh my gosh, this is horrific. And so that was my first constraint, was going, well, hang on, how do I get over that hurdle? And then the other ones. Is that a layer that kind of comes into it, which is, because people might have access to capital, people might have access to cash flow, people might have access to borrowing, but the problem is that they're just shot in the sense that the world's burning around.
Trigger shy.
Completely. And so the theory of constraints for them is actually the confidence in going, I'm bucking the trend here, Goose. Like I'm the one escaping the pack. Usually in a pack mentality, I'm the one that's going to get killed. Like,
it's only your future depending on it here.
You
buy the bong house, you're out, right? You're absolutely out, bankrupt.
Totally.
Yeah, no, you're 100% correct. Which is exactly why I said, like, it first comes down to asking the question, not should I, but it's how do I, or and if I was going to, what would that look like? I mean, it depends on obviously multitude of things, and sometimes it is going to make sense to focus on some other aspect of your life. And I mean, transparently, right now, I'm focusing on some business interests and stuff like that right now. So there's reasons where you might say, hey, at this moment, I am not suddenly going to go and spontaneously buy a house. That being said, understanding what that pathway looks like strategically is still really, really important, right? And so the mindset piece is tremendous. Working through that, though, you've got to actually work out, okay, why am I even investing? Like that kind of goes back down to a basal element, and then understanding, okay, well, what are the various resources that I've got at my disposal to be able to help me continue to move forward. And you might be able to find that it's a differentiation of capital allocation or a differentiation of perspective that is going to give you that capability to move forward. Most people who get stuck in life, and I don't care whether it's like a health journey, a business journey, a property journey, anything like that, it's usually just a perspective shift that is required. And so I would suggest that if the constraint is you, then that's an opportunity to look inwards, not outwards. It's not the property market that actually has an issue. It's actually the individual that has an issue. And so then you get to ask yourself, okay, well, what is it that I'm afraid of? And if I was afraid of that, what could I do to protect myself from that downside risk? Or how could I get comfortable with that risk? But that comes down to internal work.
All right, fellow property investor, if you loved the value from this short video and wanted to know more about how you can win at property investing, check out the full episode by clicking the link on your screen or in the description right now. Alternatively, click subscribe and you'll never miss another one of these videos.